What's up, stock lovers? Good morning. Eric here. I want to give you a quick update. Datadog just reported earnings here August 4th, pre-market. Stock is actually down. It was down about 10%, down around 6% right now. I'm going to get to some information of why I think the stock is lower and where I think the stock is headed next. But overall, the results were pretty solid. There were a couple misses we'll talk about. Revenue growth, 74% year over year. So revenue, the growth hasn't really been a problem with Datadog. They're in the hyper growth. It's more about how they get that path of profitability, valuation, things like that. So you can see the ARR when you look at 100K plus, that grew from 1570 to 2,420. So the larger customer base is growing. So a leader again, guys, in the 2022 Gartner Magic Quadrant. This is for application performance monitoring and observability. Datadog also announced this acquisition of Secret. This is to make API observability accessible. What I thought was interesting is they're not disclosing any of the financial information. Maybe that's part of the reason why the stock sold off. So if you're not familiar with APIs help connect software. You think of different software modules, different products, all that has to communicate together within a complex IT organization. So Secret's unique API platform solves many of these technical challenges, makes it easier for organizations to quickly and automatically discover and manage APIs across their environments with minimal effort. Datadog plans to incorporate these capabilities into its security and observability offerings and build many more features for developers, operations, and security engineers to better manage the health, availability, and security of APIs. So looking at the numbers really fast, so revenues beat by 7.2%. The operating margin for this quarter beat, adjusted EPS beat. That was a 71.4%. That was a solid beat. So adjusted EPS, the actual was 24 cents versus a consensus of 14 cents. Billings was actually a slight miss. They missed by 6.5%, but they still beat on top and bottom lines. And then if you look at the guidance, so the guidance revenues are in line, so 412, and you look at operating income, that's a miss by 6.1%. Adjusted EPS is a beat of 6.7%. So real quick, in a nutshell, why did Datadog stock sell off? Why didn't this thing pop 10% after earnings? Well, we're going to look at a chart, and I'm going to give you some valuation metrics on this as well. Before I do that, I need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/fired up wealth. And if this video is helpful, make sure to like, subscribe, and comment. So Datadog stock topped out around $200 a share back in November 2021, like a lot of growth stocks. It fell off a cliff, bottomed out here around $81. You can see it tested this $80 range several times. We do chart day in Patreon Discord every Wednesday, and you can see some of my previous notes here in orange. Just this Wednesday, yesterday, we did chart day in the morning. I said it's been very bearish recently, but they have earnings. Bearish just meaning that it's been kind of going up to $110, $120 and then selling off to $80. If you're trading it, it's like a yo-yo, and you can make some really good profit on it. So it rallied basically 30%, guys, from $80, $85. It rallied up yesterday to like $113, and now it's pulled back about 5%. So it's pre-market right now, $106, $105. If you were buying this as a long-term investor, you're probably accumulating shares, $85 and $90. So I think a lot of this comes down to the acquisition. The acquisition didn't actually tell us the financial information, so what they actually paid. There could have been some knee-jerk on that. The fact that the stock was up, 8% just yesterday alone, it's only given back part of yesterday's gains. And it's gone up, 30% over the past 2-3 weeks running up into earnings. So to see a little bit of pullback is not that surprising. There also is that slight guidance miss. Also, when you look at valuation, it's still one of the most expensive stocks really on the planet. In fact, the only stock that's really more expensive when you think of the cloud world, this is true SaaS. Snowflake is more database as a service. That would be a little bit more expensive. These guys have been rocking around 19 to 20 when you look at EV NTM, when you look at that multiple. So they're looking, 19 to 20 in the EV NTM. That's still pretty expensive. It's one of the top 3 most expensive in the cloud arena. And I think that's part of it. So when you look at this from a long-term investment, it's doing really well, but it's very, very expensive. And there's a lot of growth already kind of priced into the stock. I think if you look at this from a technical level though, guys, I'll be honest with you, if the market stays bullish, if this thing gets below $100, it's probably an opportunity to add. I think that thing probably rips higher, and you might actually see it come up to $120, $125. This R3 up here is $127. I think it could consolidate, and if the market stays bullish, you're probably going to see that $120 to $130, price range on Datadog. And quite frankly, it's high quality, it's hyper growth. There's only a handful of stocks that fit really in that realm. So do what you will with this. You know, I'm not a financial advisor. I can't tell you what to buy or sell or anything like that. But these are my thoughts on it. You know, I worked in the software arena for about 12 years, and this is one of my specialties when you think of software as a service, also in semiconductors. What I'd like to do is I'd like to invite you guys to watch a video that I just did. I just did a video yesterday on SoFi, and there's an end screen over here. You can click on that, take a look. It's only about a 5-minute video, but it gives you kind of an outline of SoFi's earnings, exactly like I just did today on Datadog. I appreciate your time and attention. Click that link. Have a great rest of your day. Take care.